9 Ethereum ETFs have begun trading today. Will it be the hit that spot Bitcoin ETFs were when they launched 7 months ago? Let's talk with Jan van Eck. He's the CEO of Van Eck, which launched the Van Eck Ethereum ETF this morning. David Mann runs ETF products and capital markets at Franklin Templeton. They also launched an Ethereum ETF today. And Ben Johnson, my old buddy, he's the head of client solutions at Morningstar, but he's really one of the ETF grandmasters in the field. So Jan, let me start with you. Your ETF, the others are out. People always want to know, how is it? Does it tracking Ether okay first day here? And do you think ETFs for Ether can be the hit spot Bitcoin ETFs were 7 months ago?
No, I don't think they're going to be the same kind of hit. They're trading very well. They launched well. They weren't seeded with as much money, but the spreads are tight. The volumes, our guess, are about 10 to 20% of what we saw in Bitcoin in the first day. So very much of a lower energy level for these funds.
But initially, everything's tracking okay.
Yes.
Today. Okay. Dave, your experience. I mean, it looks like everything's tracking fine with yours as well. But same question: Do you think, is there any chance these spot Ethereums are going to be the hit that spot Bitcoin was?
We think they'll be a hit. Whether they're going to get the same amount of assets is probably unlikely. I mean, if we used market cap of Bitcoin compared to market cap of Ethereum as sort of a proxy, maybe we're talking 3 to 4x less. So if all those new funds, all the Bitcoin funds that launched in January had about 36 billion over the first 6 months, then maybe these new ones have, call it close to 10 billion, which isn't the same, but it's still pretty awesome.
Yeah. And Ben, the same thoughts for you. Same question, essentially. I think everyone was surprised, some pleasantly, about how the inflows that we had into spot Bitcoin ETFs. 17 billion under management, in inflows rather, right now. What's your expectations here?
Yeah, so I think what we've seen thus far today is proportionality. So volumes that are roughly proportional with, as David alluded to, the relative market cap of Ether vis-a-vis Bitcoin. So clear there's healthy appetite, there's healthy volume, there's healthy demand there. And I think what we're seeing is just ETFs once again doing their thing, the same thing they've been doing for the past 31 years, which is opening up access to new markets, new portions of the investment opportunity set for investors, and putting that in a package that is cost effective, it's convenient, and it's compatible with the way that more investors are building their portfolios these days.
Yeah. Dave and Jan, you can weigh in on this too. You launched, did you launch with zero fees until January 31st of next year? Is that right on this? Did I get that right? Zero fees?
Yeah, correct. 6-month waiver of zero management fee. Correct.
Right. So most of the others, and including you, Jan, you have zero fees for at least 6 months. I think Jan has for the next year. And I know you guys all did this with the Bitcoin ETFs. You basically cut the fees to essentially zero. This has got to be costing all you guys a lot of money to run this. So explain the rationale for this no fee structure.
I think fee waivers have been in existence for a while. I think what's somewhat new here is, at least in my experience within the industry, is having so many identical exposures launching at the same time. I think brought the fee conversation to the forefront in terms of differentiation. For Easy ET, we'd love to talk about other things from a Franklin Templeton perspective in terms of our digital asset capabilities from differentiation. But these are all going to provide the exposure to Ethereum. They should track the price of Ethereum. And so as investors are looking at A to B to C to D, fees are going to be top of mind. And it wasn't surprised that so many issuers took the zero fee waiver.
Is it just as simple, Jan, as this is a new asset class. We've got to attract new people. This is how you do it. You cut fees, or is it something more going on?
Well, it's because what the SEC decided to do, as was just discussed, is we were first to file of ETF issuers for Bitcoin ETF, same for Ethereum, same for Solana now. But the SEC in its wisdom decided to let everyone launch at the same time, which has a sense of fairness to it, but it meant that it's sort of a bloodbath for ETF sponsors, and we have to waive fees. I think how we try to differentiate ourselves is not going to be on the fees. but is our longer term conversation with investors and pointing out, listen, Ethereum's got great positive things about it because usage is growing at 70% a year, but it's got negative things because it's got in a price war a little bit with Solana, number one, and so it's losing market share. So you have to understand what's happening with the fundamentals for these blockchain software products to understand whether they belong in your portfolio or not, and that's what we're trying to do.
Yeah. Ben, a lot of crypto enthusiasts are very excited about this because they say Ethereum is very different technology than Bitcoin, which I happen to agree with. Bitcoin is a digital currency. Ethereum seems more of a technology play because the emphasis is on smart contracts and decentralized finance, and we can talk about what that means. But do you believe that argument? Is there really an important distinction here? And is that enough to attract new people to this as an investment and in using this technology?
Yeah, I think it's important to note that these are two fundamentally different underlying assets, Bob. Bitcoin is finite. There's only ever going to be so many Bitcoin in circulation. So many think of it as a store of value, a form of effectively digital gold. Whereas Ethereum and the Ether contract that sits on the Ethereum network is really more of an infrastructure play. It's something that really others are going to build all form of different things, all form of different smart contracts, to track shipments around the world, to validate real estate transactions, even to maybe rebuild large portions of the financial markets infrastructure as we know it today. There's a lot of potential there, and Ether, by contrast, is infinite. It can grow to the dimensions of the use cases that ultimately people find for it. So understanding those fundamentals, understanding ultimately the investment thesis, if there is one, I think is essential. And this really brings, I think, investors back to basics. Know what you own, know why you own it, and size your bets accordingly.
Yeah, this is why, the reason I'm excited about this is exactly because of the smart contracts and DeFi. This is the blockchain technology that really excites me. The ability to reduce friction in financial transactions. You can open a digital bank account, you can send money to your friends, you can borrow money, you can trade, you could theoretically buy real estate, you could theoretically do anything. You could use it to settle stock market trades even, potentially. So it excites me a little bit. So Bitcoin has what, 1.3 trillion in assets right now? Ethereum has 400 billion, something like that. So I think, as Dave mentioned, Ethereum is 1/3 the size. But is that the right way to judge this technology? I'm getting a little wonky here, but when you invest in Ether ETFs, are you investing in just a cryptocurrency, or are you investing in a technology involving smart contracts and DeFi and stable coins? What are you getting when you invest?
I think it's really important, as I said, like these are technologies that have to be used. So investors have to know how many people are using, whether it's a Bitcoin network or the Ethereum blockchain to settle transactions. And then they have to earn money. So people look at the total, I'll call it market cap value, but we would say, what revenue, what is Ethereum earning in terms of transaction fees? And over the last year, it was about $3 billion. And as I said, its usage has been growing, but its transaction revenue is stalled because it had to do a price cut last year to compete against Solana. So people need to look at the sales, I'll call it the revenue or sales number, as well as the total market cap.
Yeah. So, Dave, for the moment, selling Ethereum as a new transaction platform seems to be the main game. But the Ethereum enthusiasts, I think, have a very potent argument. The platform is at heart really a technology investment. That is fundamentally different than investing in Bitcoin. Is that what's going on here? I'm trying to figure out what other reasons, other than I want to buy a crypto asset, is there to make for investing in Ethereum over Bitcoin, for example?
No, I think that's right, Bob. Kind of working backwards, looking over the last 6 months, the initial conversation was sort of like, okay, how much crypto or digital assets should I have in my portfolio? What's the right allocation? Should I have 1 or 2 or 3%? But it was sort of this catch-all digital assets, and at the time, from an ETF perspective, the only game in town was Bitcoin. And now we have an Ethereum, and so there's two choices. And now, as Ben and Jan both alluded to, we can now have better conversations about what's the difference between Bitcoin, more of a store of value, and Ethereum as the call it the protocol economy with all this interesting, future of the internet and building smart contracts. So now we can actually have a conversation about cash flows and revenue that we aren't that different than other technology plays. If we look at some of our growth ETFs, equity ETFs, hey, why is our focused growth overweight NVIDIA and Microsoft compared to other tech companies? Well, that's analysis and research, et cetera, and that's what we're going to start seeing here between Bitcoin and Ethereum.
Yeah. Ben, the promise of Ethereum, I hear this from the enthusiasts all the time, and DeFinance, is that in theory, it could be a much cheaper, more efficient way to do business. So I can open a digital bank account, send money to my friend in London or Thailand, much cheaper than sending it through a traditional bank and giving a huge vig to JP Morgan. This is the promise. This is what we've been told. Is that what is shaping up? Is there any indication so far that this really is a better and more efficient way to do financial transactions, for example? That's just one example of smart contracts, but you know what I mean.
Yeah, no, Bob, I think the burden of proof is pretty high, right? And I think if you look no further than our own backyard in the ETF ecosystem these days, there aren't really that many more efficiencies that we could possibly eke out when we're living in an environment where you can own a portfolio of ETFs that encapsulates virtually every investable security and asset in the planet for a handful of basis points. So, the real gains, the real wins for an investor in a diversified ETF portfolio by wholesale replatforming this ecosystem into a new environment, onto a new tech platform, is really de minimis in the grand scheme of things. So I think the burden of proof is high. Now, there are other sort of avenues, there are other industries where those gains might be greater for the end consumer, for the businesses that operate in those space. But when I think close to home, when I think specifically at all of the gains that we've gotten within this ETF ecosystem over the course of the past 3+ decades, most of the hard money is already been earned and ultimately is sitting in these investments, compounding to investors' benefit as we speak right now in this very moment.
Yeah, spoken like a true Boglehead, just like me. I'm a Jack Bogle disciple, folks. But same question for you: what the promise here is reduced friction in financial transactions. I'm just talking about DeFi here, and there's many other uses. But is that promise real? Are we working in that direction? Does Ethereum deliver on the things that it's supposed to says it's delivering on?
Yeah, listen, I would say it's not a solution in search of a problem.
No.
But I would agree that the ETF ecosystem is pretty efficient. Where what's inefficient and where you see the growth in use is the payments. And the form of stablecoins, which track the US dollar, is increasing. The volume of stablecoins is approaching the volume on the Visa payment network. Almost $10 trillion a year. Now there's only $200 billion in assets, but the velocity is tremendous. So a lot of people.
What does that do? Does that increase stability in the system?
Who's using it, right? It's traders on crypto exchanges like Coinbase. Because if you want to trade Bitcoin from second to second or Ethereum, you can't go into the banking system to settle your transactions or wait for T+1. You want to do that instantaneously. It's much more efficient use of your capital. So that's what's happening, and now people are using it for international payments as well, and it's been growing dramatically. I think that is the breakout usage on the horizon for 24 and 25 is stable coins.